Come on.
Welcome to Own the Chaos. The stock market is crazy and chaotic.
Crash. You son
Oh, God. Hold on. Pause.
Brad and Fat Man Zoom are here to help you own it.
They were targeting Wall Street when they should have been targeting Capitol Hill. They should have been targeting DC. This is the same thing, and this is what
People keep missing. I don't know what the hell's going on with that. It's always so random and it's so very much annoying. Guys, what's going on? Welcome to Own the Chaos. My name is Brad. The stock market is crazy and chaotic, and so is my effing countdown. It has been a wild day in the stock market today, again, but for good reasons this time. We're going to get into that as well as some earnings today. We got Chargepoint, Snowflake, and Okta on the docket today. We're going to get into that in just a moment. But as always, let's set everybody up with the starting five. We got Jeff Punnicka, Ralph Vandenhoek, Pastor David Hopper, Rudy Brown, and I'm probably going to butcher this. Is it Yoli Sarias? You guys are the starting five. Thanks so much for joining the Stock Watch Live or Stock Market Live. It has been an interesting day. We had the Fed speaking today, in front of Congress, and he was just out with it. He was just out with the rate hike, which is 25 basis points, which is pretty amazing. And then the stock market responded ridiculously. It was an unbelievable move. The Dow right now is up quite significantly. Let me just double check here. Yeah, it's up around 645 points. We got the NASDAQ up 256, which is good for almost 2%. The S&P is up 2%. And it's been a wild day. So why did this happen? Why is the market up? Let's take a look at the SPY real quick. You can see how this has just made a monster move once we found out that the Fed is definitely planning on increasing rates by 25 basis points in March. It's very rare that you hear something like that come out outside of a Fed meeting. And the market is praising a 25% or 25 points. So 0.25% rate hike on interest rates. So normally you would think, probably with your logical brain, well, if interest rates are going up, why is the market happy about this? You know, doesn't this slow down growth in the economy? Isn't this kind of starting to wouldn't this be a bearish sentiment? And the thoughts behind this, you know, initially, you know, your quick answer could be yes. But here's the thing. The market had priced in a 0.5 point rate hike for the most part in March, and then 0.25 point increases thereon out. And so, yes, you know, there is that potential of the slowing of growth in the economy, because, you know, we don't want things running too hot and then inflation just continuing to crush companies and the price of everything. However, when the market overcorrects and the Fed comes out and says, hey, we're only going to raise it 25 basis points when everybody was thinking 50, then the market says, okay, this is much better than what we thought it was going to be. We're not going to slow down as fast as we thought we were going to. And so that is why you see the reaction that you're getting today. I have called this repeatedly. Now, I will say that I missed the bottom call by a little bit. I thought that we could potentially see a bottom back in January 24th, and it looked as if we were starting to see that. But then obviously the Russia-Ukraine thing was just an unforeseen mishap, I guess, on my part. So I missed that call. But it looks as if now we're past, I think, the worst of it, barring some sort of other craziness that might come out of Russia. I mean, it would have to be wild, nuclear type of conversations for that to take place. But now that we kind of have a lot of clarity with what's going on from the Fed, and they're not as hawkish as a lot of people thought we were going to be, or they were going to be, the market can kind of breathe a sigh of relief. And that's what we're seeing. And I think that we could potentially see a rally going into March. And again, there is going to be a lot of headwinds when it comes to things that are going on geopolitically. But from the Fed standpoint, he's been very clear. Jerome Powell's been very clear on what's been going on. And I have said this from day one, that I thought Jerome Powell was doing an incredible job of managing the economy and the environment that we've been in. And is inflation going away right now? No, but I do think, and I've stood by this as well, that I do think that we're going to see inflation tail off. And it's all going to start with the supply chain easing. And we're seeing some huge moves in growth stocks in general. I mean, I'm looking at Facebook right now. It's up 2.5%. CrowdStrike is also up 2.5%. Even Microsoft. I just talked about Microsoft yesterday's video. If you guys didn't catch that, go make sure you watch it. That's back up over $300 a share. Some of the stuff that has just been ridiculous. Even Lululemon's up 4.5%. Airbnb's up 4.5%. So growth is just on a tear right now. And so I think that because of all that, I do think that we have finally seen the bottom. I think February 24th, I was a month off. What's a month between friends? Was the actual bottom. And I think that we can continue to see moves going forward. Now, again, this doesn't mean everything moves up, right? This isn't high tides rise all ships type of thing. I think that still, I stand by this, the companies that make money and are growing are going to continue to do well. And I've said this as well. Having a good balance of value stocks or industrials, materials, that sort of thing is going to be a key area to hold. Energy is still very much in that conversation. And as I'm watching oil go up over $112 a barrel, which is wild. I think 120 is inevitable at this point. And then looking at good growth stocks, not growth stocks that are reporting for losses. There are exceptions to the rule, and I have a little bit here and there, but if your entire portfolio is wrapped up in the stocks that are reporting for a loss in a rising rate environment, you're still in for some pain here. So I think, again, looking at good, cheap stocks that are still making money, that still have high growth potential, Facebook being one of them. And I'm just pointing that out right now because it's on the screen. Facebook is trading at a multiple in the teens. It makes zero sense to me. A company that's bringing in 40 billion in free cash flow is trading at 16 times next year's earnings. This is mind blowing. So I think that there are some really good opportunities in growth stocks that have gotten beaten down that make money, that don't report for a loss. And that's where I think that it's going to make a whole lot of sense for you guys to take a look at. So that's my general thoughts on this. I'm not usually one to, pat myself on the back here, but I'm doing it today. I fucking told you all. There, I said it. But guys, really good to see you in here. Let me just give you a shout out to some more people. I see Jeff Chow in here. I see I already shouted out Jeff Panicka. Daniel Camarena, it's good to see you, my man. Live from the FedEx truck. Volume has been average to low volume, but it's back up today. Good to hear the business is doing well over at FedEx. Thanks for tuning in, my man. Market's happy because it's what it expected. Actually, the contrary. The market's happy because of what it wasn't expecting. So the surprise was we only got 25-point rate hike versus 50-point. Now, the surprise would be is if Jerome Powell says, hey, guess what? Just kidding. We screwed up. We're going to actually raise a half a point. I don't think that's going to happen, but that is the sentiment. There's what do we have to look forward to as far as fear is concerned? Really, the only other thing is the geopolitical side of things, but I think that's probably going to be decided over the next couple of weeks as well. One way or the other. I would love to see Russia back off. I don't think that's going to happen. Things aren't looking great in Ukraine, and I'm really sad about that. Even though that they are putting up a ridiculous fight, and it's really incredible to see the resolve that the Ukrainians have over a madman. But it's just not looking great over there. But regardless, if we get some sort of clarity one way or the other as far as what's going on on that front, I think that the markets are going to rip even higher. So I made this clear. I'm all in on stocks. I'm going to remain all in. I am going to rotate some things around. I mean, things like United Healthcare, which I think I'm going to probably rotate out of and go find something that's much cheaper. But I'm going to save the rest of that conversation for our Chaos crew, which you can join by hitting the join button next to subscribe, or you can go to ownthechaos.com. Every day I put out a watch list for all of our folks. Today I put out an incredible watch list. Ford was on there, and Ford actually made a monster move. Stocks up 9% on the announcement of splitting up the ICE part of their business and the EV part of their business. Investors are really super pumped about this. I can't wait till this moves up above that 1860 resistance. I think that Ford's going to continue to rock and roll. We've talked about Bank of America also being one to own, and Bank of America is ripping today too. Finally coming back up to test up over those 200-day moving average. I think the financials are going to be really, really set up to scoop up here. And there was quite a few other ones. If you guys want access to that, again, hit the join button next to subscribe, or go to ownthechaos.com. We'd love to have you guys there as a part of the crew. Next, we have on the docket. Oh, hold on. I see. Oh, Hyper Viper. Thanks for the donate. Little Putin needs to smoke. I love that. Thanks for the donation. Appreciate you. I see a lot of Ben Young's giving me permission to pat myself on the back. I appreciate that as well. Apple has a nice entry point. Yes, it does. Duke, subscribe to the channel. Thanks so much. Appreciate that as well. Lots of good conversation from you guys. So I see a lot of you guys in here talking about Okta and Chargepoint and Snowflake, but there are other earnings. They're much smaller companies, but if you guys want me to take a look at those, I'll certainly do that as well. Let me know what your favorite stocks are that you're looking forward to. Put it in the chat. Let me know what you guys are most excited about. Maybe it's those top three: Snowflake, Okta, or ChargePoint. Speaking of stocks that don't report profits yet, Snowflake is definitely one of them. They're expected to report a profit today. Average estimate here is at 3 cents per share. We also have average estimated revenue coming in around 372 million. This is one, if you guys recall, Salesforce has stake in, Warren Buffett has stake in Snowflake. And so that's going to be an exciting one to watch. Okta also on the docket here, another cybersecurity play. I think that this one also has a lot riding on it. This is set to report a loss of 24 cents per share, $359 million in revenue for the quarter. So that will be an important one to watch. Actually, where is Okta? I have been to take a close look at it here. So it is actually trading down quite a bit. It is it was at a high of 294. It's at 182. So it is corrected significantly. So this will be another one where if they don't come in and beat handily and beat on guidance, that could get ugly for something like that. Chargepoint, as we all know, has also been in deep correction mode, reporting a loss of 15 cents per share and coming in at 76 million. So those are going to be some exciting ones. I think that Chargepoint will be an interesting one to watch. And one of the big reasons is because of the dynamics that we're seeing. Is the growth still there? Now, obviously, we heard from Joe Biden last night in the State of the Union talking about EVs in general, and he snubbed Elon Musk yet again. How many times are you going to do this to this fucking guy? I mean, honestly, how many times? So if you guys didn't catch it, let me pull it up, actually. You guys didn't catch it. Joe Biden talked about, and this isn't me getting political. This is just straight up facts. Okay. I'm not going to get into that conversation. So you can just save the Joe Biden bashing. My beef is just with the general government and their issues with Elon. I mean, it just doesn't make any sense. You have a company. I get that, so I wish Fat Man Zoom were here. I really do, because this feeds right into his own issues with just the government in general, no matter what side of the aisle you sit on, has everything to do with cronyism. And it doesn't matter if you're Republican, Democrat, or independent. Cronyism exists in the government, and it is ridiculous. So here it is. Let me pull it up over here. I'm going to share my screen with you guys in a second, just so you guys can get some context here. Let me pull this up. So there we go. So Joe Biden, basically, whoever runs his account, says Ford's investing, and this is what he said in the State of the Union as well. Ford's investing $11 billion to build electric vehicles, creating 11,000 jobs across the country. GM is making the largest investment in its history, $7 billion to build electric vehicles, creating 4,000 jobs in Michigan. To which Elon Musk replies and says Tesla's created over 50,000 U.S. jobs building electric vehicles and is investing more than double GM and Ford combined. FYI to the person controlling this Twitter. I tell you what, Elon Musk wins the internet again, guys. What does this guy got to do? So what? He's not involved with unions and doesn't believe in unions. And there's a ton of cronyism that exists amongst unions in general. So of course the government's going to be all about it. But the fact of the matter is this man is leading the entire world in EVs and employing more people related to vehicle manufacturing than anybody else in the country. And he still doesn't get the flowers that he deserves from the government. We should be kissing this guy's ass. I mean, the government should be kissing this guy's ass, giving him whatever he wants. And yet you're letting politics and cronyism get in the way of it. And I think it's absolute bullshit. Give me one other than the fact that it is the U.S. is the best place to have a business. I mean, what's keeping Elon here? Like if he doesn't feel a love, I think that there's could be, if the U.S. wasn't the best place to have a business, there could be many reasons as to why he would leave. I mean, he up and left California, right? For many of the same reasons. Also, taxes were a part of that. and then he moved to Texas. But now on a federal level, he's getting treated like shit as well. So I'm not saying that Elon's just going to up and leave the US, but like you're not doing anything to make him want to stay. I'll say that. It's just unbelievable. It just pisses me off to no end. And granted, like I like Ford. I think Ford's a good one to own still. I think Ford still outperforms the stock, outperforms Tesla this year, just like it did last year. But it doesn't mean that I hate Tesla. And I think that Tesla's still going to be the king among EVs, you know? So it's just so crazy to me. It's just so crazy to me. And that's my rant for the day. Nevertheless, the stock market is closed. So we're going to go ahead and get a look on to what's going on with the stocks that are reporting earnings today. So we have Chargepoint, Snowflake, and Okta that are all reporting. And let's go ahead and take a look at Okta right now. It doesn't look like there's a whole lot of movement with Chargepoint just yet. Here is Okta right now. It looks like there's something going on here. Let's look at that. Yeah, there's some movement here on Okta. It spiked all the way down to 170, now sitting back at 182. And then let's go back and look at Snowflake. That stock hasn't really moved a whole lot. I see a lot of you guys actually. Oh, Alex is interested in C3 AI. We can take a look at that. Jeff Panicka says snubbing Elon means karma's coming. Yeah, I hope not, for our sakes, right? I have Michael Hanna said I will not be surprised if Okta becomes positive before Q4. Definitely agree with that. All right. So what's the best way to find out if growth companies are profitable? Simply Google. Yeah, you could go to any of your favorite platforms. Yahoo Finance is my go-to. It's the quickest way for me to find it. You go to CNBC.com, Market Watch, and you can look at their financials. They're usually right there on the screen. You don't even necessarily need to dig into a balance sheet or anything like that to discover that. It'll tell you. So that's the easiest way. But yeah, let's go ahead and pull up some of the numbers here. It doesn't look like we have anything from Snowflake just yet, even though the stock is starting to move up. It doesn't look like it has that kind of volume that tells me that earnings are out just yet. But we can take a look, see where they're at. Nope, nothing there yet. Let's check out real quick. Like Okta came in and beat on earnings per share. Let's go back and look at that chart. Look, they might have beat on earnings per share. Yeah, so they beat on earnings per share, a loss of 18 cents. And as I mentioned before, the loss of 24 cents. And they beat on a revenue as well, 381 million versus the 359 that was expected. So they actually beat on earnings. The stock is down now around 1.5%, though. We'll see if that turns around. It is early yet. There might be something in the guidance that has investors turned off. As we get more from Okta, we'll see how that shakes out. But yeah, the stock is continuing to move down here now. It's down around 2.5%. We'll continue to keep an eye on that. Snowflake is still chilling here, but it looks like those numbers may be out. Looks like we have something there. Thanks, Raylan. Appreciate you. By the way, Raylan, I happened to check out your channel the other day. You need to stick with that. You need to stick with the investing stuff. You can do a good job over there. But yeah, Okta came in a loss of 18 cents. They beat on 24-cent estimate, 383 and 359, as I mentioned earlier. Snowflake is getting pummeled right now. Let's take a look and see if we can find those numbers out. Stock is down 7.5%. Still getting crushed. As soon as I get those numbers, I will share them with you. Don't have them just yet. This is I mean, if they came in and did not report a profit, this is not going to be good, which is looking like that's potentially it. The stock's now down 11%. Holy cow. Yeah, let's go to the 1 minute and see what we got here. So down 12% after hours. Still waiting on those numbers. Let me look at I have a couple of sources pulled up. And feel free to throw them in there as well in the chat, but I don't have any numbers just yet. I do see the full report. But sometimes those full reports don't give you shit. Revenue came in at 383 million versus 190 million, it looks like. The year-over-year estimate. Michael Hanna says Okta outlook is not great, so that's probably why that's down. But yeah, Snowflake's getting hammered right now. Stock is down now 19%. Jesus. It is getting absolutely fried. Look, it's falling down off the screen. It's down to 213 after closing the day at 264. Holy shit. Rest in peace. Okay, Q4 product revenue for Snowflake, 359.6 million, representing 102% year-over-year growth. That's actually really amazing. But I don't have the quarter numbers just yet. It is still getting hammered. Look at this. It's now down 22%. All right. As those numbers come in, I'll share those with you on Snowflake, but it is getting hammered right now. Now coming down, trying to go down below 200. Holy cow. All right. Let's go back on Chargepoint. See where we're at there. Oops, that's not Chargepoint. Oh, what the hell? Come on, Weeble. I blame Weeble on my typos all the time, just so you know. It is 100% operator error. So it is up slightly. It's up 2.5%. Came in with 80.7 million in revenue compared to the 76.2 expected. That is what the revenue numbers are showing. I'm just trying to find earnings per share. Huh. Okay. Interesting. So quarterly revenue for Chargepoint increased 90% over year. That's really good. Still looking for earnings per share. Don't have those just yet. So it looks like that Chargepoint beat on revenue, and the stock is being rewarded. It's up 2.5% now on a crazy spike down to $13, $13.20 to be exact. That is pretty crazy move, as expected, and the stock's now moving right back up. It's now up 4%. There we go, Chargepoint. Come on. As soon as I get those earnings per share number, I'll get them to you. Snowflake is still getting hammered here. I mean, my God. They came in at a loss of 43 cents. Snowflake came in at a loss of 43 cents. How do you miss that badly? Now down 30%, well below $200, sitting at $190. Holy shit. Wow. They missed on earnings per share by 43-cent miss. The expectation was that they were going to come in positive 3 cents. Oh my God. Rest in peace. Devin Masia says 25 billion gone just like that from Snowflake. Jesus. What was the IPO price for Snow? Good question. It was up there. Let me pull that up. Let's go out to the daily. Yeah, it was up there. It got as high as 319 on IPO day and as low as 231. So it's obviously well below that. The 52-week low for Snowflake is at 184. Let's go and move this line down here. So you guys can see that 184.71. That's the number to beat. Oh my God. The stock's down 30% on an absolutely atrocious miss for Snowflake. Wow. So yeah, if you guys are just tuning in, first of all, if you're just walking through the door, make sure you hit that like button on your way in. I certainly would appreciate it. We got 50 likes with 321 of you guys in the house. So thanks so much for allowing me to be part of your afternoon. I appreciate it. Very interesting. Snowflake, Raylan says, was a Buffett favorite, if I remember correctly. You do. That is correct. Buffett has it, as well as Salesforce. Sorry. Salesforce has stake in this. So yeah, I'm just reconfirming. Snowflake did come in with a loss of 43 cents. I just had to cross-reference this because I just didn't believe it. That is wild. I'm glad I'm not a Snowflake holder. Stock's down 27%. Is Snow a buy? Asks Debbie Dash. That is a hell no. I would not be touching this thing. I mean, unless you're feeling lucky and you want to try to catch the overreaction, which this, I don't think is an overreaction. A loss of 43 cents when you're expecting a positive 3, that to me, this isn't an overreaction yet. If it gets down to 184, maybe we start to have that conversation, but nope, I don't think so. Stephen Hoyer says Snowflake is only 0.5% of Berkshire Hathaway's portfolio. Yeah, but they still have a significant stake in Snowflake. How much does Buffett own of Snowflake? Isn't it like 12% of Snowflake? I thought it was in the double digits. Somebody correct me on that if I'm wrong. Chargepoint Holdings, yeah, loss of 23 cents. They missed by 5 cents, so they missed on that. Revenue came in at 80.7, beats by 4.5 million. Thanks, Jeff Ponica, for that. So Chargepoint, let's check back in with them. Stock's up 8%. Look at this. Pretty decent move. Almost 9% now. So even then they missed, they beat on revenue, and I would imagine that their guidance is actually quite good. That's probably why this is moving up significantly here after hours. But the big story, guys, Snowflake coming in with a loss of 43 cents when the expectation was for them to come in profitable. My goodness. This has been the theme, though. We talk about this all the time. We talk about how these stocks in this environment, we just heard from the Fed today, they're raising rates by 0.25% in March. And companies like this that report for losses and then don't even talk about trying to grow are going to get absolutely punished. We've seen that time and again this quarter, this earnings season, and Snowflake is the latest victim. And it looks like it is going to be rough for them moving forward until we hear any signs of growth from them. So if there's a lot of you guys that are in Snowflake, sorry for your loss. Rest in peace. RIP. This is tough, guys. Oh, my God. C3 AI. C3 AI's ticker symbol. I haven't looked that up in a minute. Somebody give me that one. Look at Okta. Somebody give me the ticker symbol for C3 AI. Yes, Okta is 4.5% down. So they came in and missed earnings too, I believe. I'm pretty sure they did. Somebody already put them in there. Let me refresh your memory. So Okta came in. They missed on revenue. No. That's not it. They came in and beat on earnings per share. The revenue they also beat as well. That's a pretty decent beat from Okta. My best guess is that there's probably some sort of guidance that we're not happy about. And I think Michael Hanna? Sorry for that. Michael Hanna came in and said that their outlook for Okta was not great. But Okta did beat on earnings per share. They beat on revenue, but their guidance was not good. And that's what happens a lot of times. It may be confusing for some of you guys who are new to earnings. There's plenty of times where we see a company that comes in and beats expectations, for the quarter that they're reporting on, which is last quarter, right? So that's in the past. And the more important thing is what are they looking forward to for the future? It has to be both things. You have to beat on earnings, and sometimes you could even miss on earnings. But if you have a good explanation and you see growth moving forward, many times you'll see a company that misses on earnings, but the stock goes off. Case in point is Chargepoint, right? They came in and missed on earnings. They beat on revenue, and the growth is still good there. The stock's up 8%. So, yeah, really tough stuff there. Let's check back in with Snow. I see Savvy Money Show checking in, says he missed what's going on here. So here you go, Savvy Money Show. Here's the numbers. Snowflake came in. Really, the only numbers that matter right now, and that's why the stock is getting absolutely hammered, is the earnings per share. They came in at a loss of 43 cents when the expectation was positive 3. I mean, you can't miss it that bad. You just can't. I don't even know how you make that up. Like, that is wild. Absolutely wild. Came in at revenue of 383 million. They beat expectations on revenue, which were around 372, which is also interesting. Like, what's the cost here? Because they came in and beat on revenue, but you miss earnings that bad. A loss of 43 cents. So what was the major cost here? I'd be curious to see why that is. Like, what's the incurred cost, especially with a company that you're in? Or I'm sorry, a company that this industry is in, where there isn't like a whole lot of overhead, not like a service industry or hospitality, right? Where you're paying, or Costco, or like a Costco, for example, right? Where you're paying employees a ridiculous amount of employees, and we're dealing with wage hikes and that sort of thing that incurs costs. So that's expected. But what the hell did Snowflake, what kind of costs did they incur to be able to miss earnings that badly, especially coming in and beating on revenue? That is just wild to me. The stock's now down 30%. It's at 185. As a reminder, the all-time low for Snowflake is at 184 and some change, 184.71. So we were pretty damn close to that. Jesus. Jeff Ponica with update on guidance for Chargepoint. I appreciate that. Let's check back in with Chargepoint. So this is why stocks that might miss come in and actually start to do well. Let's go back to the 5-minute chart and we can see how Chargepoint's moving. You can see it's up nearly 8%. Guidance for the first quarter, April 30th, 2022, expects revenue of 72 million to 77 million, represents anticipated growth of 84% as compared to the years prior to the same quarter. I think that's probably above guidance expectations. So that there you have it. Chargepoint came in and beat earnings. I'm sorry, they missed earnings. I'm getting Chargepoint and Okta mixed up. They missed earnings but beat revenue, Berlin B, and they gave a really good outlook as well. AI, thanks for the update, guys. C3 AI is the ticker symbol is AI. I should have known that, and I think I did know that. It's been so long since I looked up C3 AI. Let's take a look at those numbers. I appreciate you guys throwing them in here. It's a village. It takes a village, guys. It takes a village. All right, let's see here. I did not have those numbers on C3 AI yet. But that stock is moving down now. It's a bit all over the place. It's a bit all over the place. VSCO, which is Victoria's Secret, also reported that stock's up 1.5%. They came in, beat on earnings per share, 270 versus a 263 estimate. Came in at 2.17 billion. Man, that is unbelievable. That's a really big number for a company like Victoria's Secret. $250 million buyback. That's great. Not a giant buyback, but that's still good. That's still good. This just announced too. Thanks, Raylan. Man, she's on top of it. She's on top of it. MGM just reported a 2 billion share repurchase. Is it shares or $2 billion worth of a buyback. Stock's up 1.5% after hours, after having a monster day already. This is interesting on MGM. It's now going to be trading above the 50-day moving average at the open tomorrow if everything stays the same. Pretty wild there, too. Okay. Nordstrom. I see Dimitri asking about Nordstrom. Nordstrom came in and beat earnings. They crushed earnings yesterday. Oh, this isn't good. Adrian says, I'd not touch a company that's dealing with cloud software and you try to check their investor page and it's down. Yeah, we haven't talked about it in a long time, but Fastly is a company that's in that same space, right? And we know how this has been treated. This is just a daily chart over the last couple of months. We know how much this got beat down. So this stock got absolutely hammered. I mean, this is $100 stock. There we go. $136 was Fastly, and now it's sitting at $18. And we thought Snowflake was going to do better. I don't think so. None of these cloud storage companies are doing well. None of them. But this is wild, guys. Absolutely wild. 184.02 is now the new low in after hours trading, which is a 52-week low. So if we see Snowflake below that 184.02, or I should say 184, what did I say, 71? 184.71 is the 52-week low. So it did touch below that. This is a falling knife if I've ever seen one. Now, one part of me wants this. Yikes. Danny Level says it's up, so maybe double check that. But man, guys, what an unbelievable day. Snowflake, the big loser here. Holy shit. All cloud storage is dropping right now, says Snookeroo. Snowflake pulled a Facebook, says Fred. Fred Waller, yeah, you're not kidding, bro. Listen, when you miss like that, guys, for those of you who think there's hope for Snowflake, let me just remind you, there isn't. If you're in Snowflake right now, expect to be in pain for a long time, because when you come in and with revenue like that and you report a loss of 43 cents when the expectation was you're going to be profitable, oh my God, like that is not going to be a very fun ride for you at all in the near future. And in a lot of cases, okay, I would say that yes, there's overreactions to everything. This is not an overreaction. This is an appropriate reaction to a company that was expected to come in profitable with a revenue beat, by the way. They came in and beat on revenue, which makes this even worse. And then they come in with a loss of 43 cents. That is wild. That is wild. Now, one part of me wants Snowflake right now. Not one part. Maybe one day. It ain't right now. Holy shit. Ugh. Ugly. No, this is not. No, I don't think so. This is not fear. This is reality, Johnny Vu. All due respect. There is a time where you buy the fear. This isn't fear. This is a company shitting the bed. Right? Like, fear is when people sell off on speculation. People are worried about what might happen. This is something that actually happened fundamentally with the company, and it is shitting the bed, and it's getting what it deserves. Right? There is a difference. There is a difference. And I think that this is an example of that, of a company that is shitting the bed, and it's deservedly being sold off. There's plenty of cases in which companies do sell off for no good reason, or there's an overreaction to a potential move down, but this is not it, in my opinion. AW says, I'm not even in a trade and my stomach is turning right now. Yeah, I feel bad for anybody who got into this before earnings or was holding anything above 250. Before we say there's something fundamentally wrong, shouldn't we figure out why there is a loss in the first place? That's fair. But when you miss by that much, there's something fundamentally wrong. The earnings call is certainly going to be important to listen to, especially if you're a holder of Snowflake. But I'm telling you, you beat revenue expectations and you came in for a loss like that. I mean, so there's not one part of me that wants any of Snowflake right now. They'd have to come in on their earnings report and say something ridiculous. And even then, I'd probably question it. I'm going to scour Twitter here for a little bit and see if I can find anything on Snowflake. And feel free to put it in the chat as well if there's some other reason that we can find as to why this took place. But this, to me, is a significant slowing of growth. I would be curious to see what their guidance is as well. Looks like the expectation for guidance was a doubling of every year for a few years as well. And this is just looking on the surface here. I'd have to dig a little bit deeper. The fiscal year 2023 guidance was at 65%. So that is significantly lower. Slowing on revenue growth. Yep. So it's a double whammy here. Not only did they miss earnings per share badly, but then they also came with guidance lower than expectations. So again, tell me why Snowflake is a good buy here. They're a tech company. Amazon posted negative earnings per share for years. Yes, but they grew. Here's again, they just told you guys that the growth is slowing here. And rates are about to go up. So now we have a company that reports losses. They told everybody that growth isn't going to be as fast as they thought it was going to be by a significant margin. They came in and beat revenue expectations and came in at a loss of 43 cents. 43 cents when the expectation was that they were going to be profitable. And now you have this. Like that, it makes sense. This all makes sense. There's plenty of times where stocks move and you just can't really make an explanation. And that's when you're kind of like, okay, this seems like an overreaction. I'm just telling you, this is not it. Snowflake should be at $20 a share. I don't know if I'd go that far, but yeah, I mean, God. That's wild, man. I don't know if this is a play on words or not, but Snowflake is definitely a good buy, as in like, see you later. Will I be on the streaming? Will I be streaming the earnings call? Ask Miggy. Nope. I'll let you guys do that yourself. This ain't it, Chief, for sure. Yes, exactly. I love this Savvy Money Show. The Amazon comparison doesn't make any sense because this is a great point. Amazon was investing their money in EV delivery company, trucks, and gaming companies, and metaverse, all things to make money. They're reinvesting to continue to grow. They grew significantly, during that time. So the growth was certainly there, and you were in a friendly environment for growth stocks as well when Amazon was doing its thing after the Great Recession. It was a perfect time for growth stocks. In this environment, when we have zero rates going on and now we're moving the rates up, Snowflake comes in, talks about slowing of growth, and now they're going to be hit with interest rates when they need to borrow money to continue to grow. So this is going to be rough. I'm not saying that Snowflake is unbuyable forever. I'm saying right now, no parts of it. Zero parts of me wants this. Maybe 6 months, 6 to 9 months, when we can start to see some sort of leveling out of Snowflake, and people kind of get over themselves on rising rates, and inflation starts to become less and less of noise. But man, this is awful. Whew. Crazy stuff, guys. Crazy stuff. All right. So tomorrow, it normally is Freddie Thursdays, but it's not tomorrow. At least I don't think it is, unless he somehow surprises me. But Freddie's on vacation. Freddie is in Breckenridge getting his snowboard on. So he's not going to be here for the live stream, but you got your boy. And I'm actually going to start reaching out to people. Who do you think I should collaborate with or have interviews with? Because I think that I definitely need that. I need to have somebody else to hang out with and bounce ideas off of. Maybe not a regular thing. I mean, I want to have Don Fry back on the show and talk to him as well. But I'm talking people outside of my ecosystem is what I'm going for too. Reach out to your favorite creator, YouTube creator, or personality. Ask them to come on the show. I'm going to do my work too. But tomorrow we do have Marvell, Costco, Broadcom, Gap, Smith & Wesson. A couple of other good ones in the morning as well. Kroger, Best Buy, BJ's, TD Ameritrade or TD Bank, Burlington, Big Lots. So some good retail companies that are going to be reporting tomorrow as well. And your boy will be here at 3:45 p.m. Eastern time. Before you go out the door, make sure you hit that like button. I certainly would appreciate it. Guys, thanks so much for hanging out with me this afternoon. What a wild afternoon in earnings. And Snowflake is just continuing to fall like a rock. It's down 30%. If you guys missed it, go back and check the earnings numbers. We've shared them several times. But, man, what a wild day. I'll see you guys tomorrow at 3:45 p.m. Eastern time. Again, make sure you hit the join button if you want to become part of the Chaos crew. Get access to our Discord, our watch list that I put out every morning, my trades, all that good stuff can be found by hitting the join button next to subscribe, or you can go to ownthechaos.com as well. Thanks so much for supporting the channel. Hit that like button on your way out the door, and I'll see you guys tomorrow. Bye.